Wilbard, wait till the top of the hour. I think I had a little note. It says when we're going to start. Anyway, look at this lineup. A lot of people like Peter Schiff. Everyone knows Mark Chandler. Mark making sense. Great. Peter Bookvar, CNBC. They go to him asking about the Fed all the time. Mark Yusko, very well known. Bitcoin advocate. Been bearish on the U.S. economy. Peter
Coach,
Goodburn. Yeah.
good morning,
Yeah,
first of
buddy.
all.
Good morning. Yeah.
I think it's more fair to describe Mark Yusko as, an excellent asset manager. I mean, the guy manages
Okay.
$2 billion, right?
Yeah. Okay.
Outside of the fact that he also believes in cryptocurrencies because, he's been
Yeah.
for his whole career an asset manager mainly.
Oh, yeah. He used to manage the Harvard endowments, and Harvard had a few bucks.
Yeah, and he has Morgan Creek Capital, and
Yeah.
Bitcoin is a much more recent thing. He has Morgan Creek Digital now to handle those affairs.
Steve Volge will be there in the background. Steve works for Forex Analytics. That's about
and
all I have on the guy.
doesn't manage Harvard's fund.
doesn't manage billions, but Steve will be there. We've seen.
Be muted.
I'll be there muted, except when Peter Schiff is going to be on, and I'm going to pretend to be the host. Peter Goodburn will be there. Mark Newton, his work on CNBC. Boris Schlossberg on CNBC. Adam Buttons could be talking about news trading. Blake's going to be talking about, how, what he sees in the markets. And we all know his skill set. Jamie Satley, one of the well-known guys, used to be with Daily Forex, has his own thing. Lydia, the cable queen, will be there. And Steve Marcantonio. I know he shortened his name with me, but he's a very high regarded trader, calls himself the Pivot King. So it's going to be a great event. Maybe one of my partners will post a link in the room. You guys have to see it. What's cool about it is that I believe each speaker is speaking for 45 minutes. And then we're going to have 15 minutes for attendees to be able to ask questions. Okay, you'll have to slip me a 20 to make sure I, get your question in there. But it's really going to be an opportunity. Think of, there you go. Thank you, Stel. So an opportunity to, call some of these guys out on the carpet and ask them some tough questions. I plan on asking at least a couple. They won't all be softballs. Okay, so I just wanted to remind everyone it's next week. Okay, so get your seats, and no one's scalping them. It's free, so we avoided the scalpers. Let's get to the markets. So dollar pretty firm. Just something I noticed here in euro, and I'm trying it down here. This initial move off the bottom, and I know a lot more people are thinking, we're going to 105 or lower, and it could be possible, but I had this 78.6 level pointed out actually down here, and we never quite got down to there and had a rally. Actually didn't quite get down to it here either, missed it by about 8 pips, but trying this, I think that the Dixie has to start fading before it gets over this 101 level, or that should be the end of this correction to the upside in S&Ps if the dollar really starts smoking. So we'll see. Blake thought we could get back to 2,800 yesterday. That's exactly what happened. So are we going to do something like this, back down towards 2640 or uglier? Or can they scrape out one more high? We just missed a 61.8 level up here. We'll see. Steve rode it up quite a ways, and he reversed a couple days ago. So I don't like to fade Steve when he's on too much. So the gold really pressing bears. We were talking about yesterday when it was about 5:07. I said on the 15-minute we were here yesterday, and I showed this, and I said we should have at least one more high, and we did. And we had 1, 2, 3, 4, 5 new highs. So um, you were more successful shorting silver yesterday. At least you got some type of pullback. And to me, it still looks like silver, even though we're railing here, is the preferred short. I'm guessing that nothing that gold becomes a better short once the gold silver ratio is up towards this 120 level. Until this time, I think gold's your preferred long when you want to be long precious metals on weakness, and silver is your preferred short on strength. And that's showing up pretty good here today. Just one thing, I'm still hoping that we're not going to make new lows in the 10-year. Here we are. And I think if we get the kind of move I think we could get, which not many people think is possible, that also could pressure precious metals. So keep an eye on that. And let's see, was there anything else I just want to show you guys, since we are on investing.com and everyone, gold looks clear for 1800. I think you got them. We'll see. But those of you that on investing.com, I know you trade a lot of stocks. So this is what I'm doing for the interest rate play. Have some here from 1550, and currently I'm down about 30 cents. And even if we take this low out, and we're not that far away comparatively to the TLT, to me, it would be a non-confirmation, and I'll add, I still think there's at least one shot up in yields before we have the move to zero rates on the 10-year. And you know what? I'll bring it up after Blake is through. But Stell, remind me, I want to talk to you about something. I saw a video by a guy named Lacey Hunt yesterday. Has anyone ever heard of Lacey Hunt? Yeah,
Nope.
he's a veteran guy. He's a bond guy, Dr. Lacey Hunt. A big deflationist. He's made a killing not even being in the stock market all these years, mainly being in treasuries. So I have a currency question for Stephen Stell. I'm going to let Blake get in here now so he can get busy trading. And Blake, good morning to you. And what are you seeing here today?
Hey, good morning, Coach. How's it going?
Good morning. Good morning, bro.
I am, I'm looking at the euro today. The euro is breaking lower. So this is
Okay.
let me pull up the euro really quick. The euro dollar is breaking down. You can see where it's breaking through, this support here, this horizontal support. Now, something kind of important is happening today. We have the European Council meeting, and even though the market's not expecting, anything big, it's worth noting that the European Council is meeting, and if they have some sort of plan that for the Eurozone to like some sort of relief package for the virus. That we could get some euro movement. I doubt it, but it is starting at 10 a.m. Eastern. So just keep that on your radar because this market's been pretty good as of late of giving us some false breaks. So the euro looks bearish right now, and we were talking about it yesterday about it breaking down. Citi had a short-term dated options, some puts put on. And we talked about it breaking lower yesterday, and while we were in the chat rooms and in our community, and it did. I'm just I'm not super convinced right now that this is a clean break. It's while we're below 108, there's no reason to be on the bullish the euro, And if you saw the PMIs overnight, they were horrible. Oh my gosh. Did you see these PMIs, Coach?
No.
Oh man.
Minus what?
Just destroyed.
PMIs don't go negative, but they can go close to zero.
Yeah.
Yeah.
I mean, you know,
People were saying the same about oil.
Yeah, I never. Yeah, anyone would have asked me a week ago, could oil go negative? I would have said, what are you tripping on? Right? But you know what, guys? None of us have traded a pandemic before.
No one has. But obviously crude, there's a reason for it going negative. PMIs, though, they could theoretically go to zero. I don't know if they go negative. Anyway,
no, they can't. They can't. Blake,
the bottom line is that they're well below. They're well into contraction territory. I mean, and you look at like German services PMI at 16. UK data came in horrible too. I mean, look at the PMIs for the UK. They came in at 12. Services PMI at 12. I mean, these are ridiculously bad numbers. It's not like we didn't expect bad numbers, but they are bad, and that's obviously, there's a couple things weighing on the euro. One of them being that obviously the PMIs, and then also, like I said, this European Council meeting that's happening today. Who's expecting fireworks from the Eurozone? They can't, and I know I got a couple of Greeks, talking right now. How's the Eurozone all the Eurozone leaders supposed to agree to a package, especially when you have Germany that's, whatever purse strings that are left, they hold the majority of them. Getting, the economies that do have, that are more, how should I say, have more cash available. How are they supposed to support, or how are they going to agree to support the rest of the Eurozone that is maybe more strapped, like, the Italys of the EU? And so there's, that's a big issue, which I don't think is going to be resolved right now. And I think that the euro, as a result, is going to trade lower. The dollar is going to trade stronger as long as equities continue to stay relatively heavy. And like I pointed out yesterday, let's not forget that we are heading into May. May seasonally is a very tough time for stocks to rally. There's the old saying, sell in May and go away. Well, the S&P, and the NASDAQ and the Dow, we may have seen the highs for, I don't know if it's this year, but at least the highs for, the next couple of months might have been put up last week. So, if the equity markets start to roll over, I would expect the dollar continues to strengthen. And that's, one of the byproducts of a stronger dollar, or a weaker stock market, is going to be a stronger dollar. So now the stock market hasn't moved a whole lot. And, as we talked about yesterday, the S&P reaching 2,800, reaching the 2,808, which is the 50% retracement we did. We are still, at this point, even if we reach for 2,830, which would be the 618 retracement, it's still hard to be, bullish equities at this point in time, right? Wow, this Aussie, look at the Aussie sitting at new highs on the day. Aussie's trying to break out as the euro is weak. One of the currencies that is breaking down right now is the Euro Aussie. The Euro Aussie is really struggling here, as we and I think this is just a bearish breakdown below the 170 level. We are approaching the 78% retracement, longer term 78% retracement coming in right around current levels. So, you got to watch for a possible bounce somewhere around here. Hold on really quick. Yeah, so I would think that the potential of a bounce around these levels is kind of high, but I wouldn't get too terribly excited about the Euro Aussie while we're below 170. So just something to think about. But yeah, the Aussie just spiked up, and you can see it's just the Aussie is acting a little bit better, and we're near that 64 cent level. I think 64 cents is still a very big resistance for the Aussie dollar moving forward. So, as we get up here, I'd be, looking to sell the Aussie personally, especially with the dollar, the way it's acting. I think the Aussie's just setting up for a good short. I tried shorting it earlier at 63. I got hit overnight at 63.65. I got hit on the spike while I was sleeping. And then I put my stops at break even when I got up, and then, it just came back up and, hit my stop at break even. So, but that's all right. I'll still look to short it closer to 64 cents if we can get up there today. The FX market though is pretty quiet. We're waiting on. We have unemployment claims today. That's going to be a I would assume a market mover. We're looking for 4.2 million new jobless claims. And so we're going to be paying attention to that really carefully and seeing if the market, the unemployment numbers get any better. But obviously, unemployment claims is the number that everybody is focused on right now. It's so funny if you think about like the last several years, we hadn't had more than 250,000 people file for unemployment every week, and as we are in full employment now, we're looking at numbers that are 5 million, 4.2 million, 6 million, and I don't want to say it's funny. It's quite scary. But the thing is now everybody's looking at weekly unemployment claims and nothing else really. So this is like the data that really matters right now. So we'll be paying pretty close attention to that as we roll into the North American session. Let me see. What else did I really want to talk about? Let's talk a little bit about crude. Crude continues to recover. And here's the continuous contract. It continues to recover, but I wouldn't get too overly excited about what you're seeing here. I think crude oil, this might set up for let me just kind of draw this out for you. This might set up for an ascending wedge in the future. So, for those of you that are, looking at crude, I don't know if does anybody here trade crude? I know that my broker wasn't allowing trading yesterday. I got messages about that, but has anybody gotten any I'm confirmation if they can trade crude today? I know that crude hasn't been able to be traded the last couple of days, but I think as we stabilize, some brokers might allow it. So let me see if I hear.
From what I read, it's only reducing trades that are allowed still.
Oh, okay. Still reducing
my
trades.
broker sent me a message just warning me that they can close positions.
That's it.
Without warning if crude goes below $3.
Yeah. If you have the ability to trade crude, what I'd be looking at is something that looks like this. And I don't trade crude. I don't trade crude personally, and I think I've probably traded maybe a handful of times in my entire career. It's like that's how little I have interest in trading crude. But if I trade it, or if I'm going to trade it, I trade it through my personal account, my PA, which is Thinkorswim, and I don't have. They've been sending messages that I can't trade it, so whatever. So what I'd be looking for here with crude is maybe a move back up towards the $16-17 level and something like that, and maybe a reversal. Let's see what else did I want to point out. Regarding like the euro. So here's the euro, and like I said, I'm not thoroughly convinced about this breakdown here. There's a lot of horizontal support. We hit the 161% extension of this recent range, and you can see it's bouncing a little bit. Like I said, I wouldn't get excited about the euro for a false breakdown unless we're back above 108 and 108.15 maybe. But if you look at some of these euro currencies, let's take a look at like the euro pound. So the euro pound, keep in mind we're back below the 200-day moving average. we're right at the 200-day moving average. I actually think that the euro pound is more of a bullish setup than anything, and especially if we don't hit new lows and we break back above 87. Well, you can just call it 88 pence if you really want to, if you really want to be safe. But I do think that the euro pound might be setting up for a bit of a reversal here, higher, if we don't hit new lows. The euro Aussie, like I pointed out a little bit earlier, I think this is breaking lower, but we're also near the 78% retracement. This is a channel. You can see this channel resistance here. Channel resistance. But if we get back above 170, I wouldn't want to be short that. Euro New Zealand, it hasn't hit new lows yet. I mean, we're, bouncing around in a range. And, and the other currency pair that I really wanted to talk about this morning, I almost forgot. Here's the euro yen. So the euro yen, now this is a really big level of support here. Let's go over to the euro yen monthly chart. So you can see the monthly chart, we're below 116. 116 is what I have felt is really, really key support. Where we close today is going to be very important. So here's your daily chart. It looks like a bearish breakdown, and I sent this analysis out via Forex Analytics. If just there's not a whole lot moving today other than euro pairs. So the euro yen is trying to break through all the support here, right? But if for some reason we close back above 116, especially like 116 and a quarter, 116 and a half, I don't think I'd want to be short the euro yen. I've been warning of a bearish breakdown because of the wedge, but again, I'm not overly confident as I'm looking around at some of these other euro pairs, and like I said, I'm a little skeptical at this point. Wow, this Aussie is just still ripping. I'm about ready to short some, actually. I'm getting really close to. Let it reach a little bit further. Let it get just about to 64 cents, and I'm looking to lay into some here. But anyway, I just wanted to talk a little bit about the euro. So, regarding the euro, and since I have Steven Stelios here, and good morning, guys. How are you?
Very well.
Good morning, mate. One piece of information that came out just a few minutes ago, so I wanted to mention, Blake. Swiss government expects the economy to shrink 6.7%, not in the quarter, in the year.
Oh, really?
Yep.
Wow.
So that's their yearly expectations. And keep in mind that the Swiss economy is not an economy that is mostly based, for example, on production. I mean, think about it. Most of the GDP comes from services, and services that I would have to say that get disrupted less than other types of services, during a pandemic. So, that makes you think about the expectations and data that come out from other types of economies. I mean, the Swiss believe that their economy will shrink during the year by 6.7%, and the Chinese believe that their economy is going to shrink less during a quarter that their economy was completely locked down. Makes you think, right?
Wow.
Yeah.
That's wild. So let me ask, do you guys think that the Eurozone can come up with some sort of relief for for what's happening economically for the Eurozone? What do you guys think about that?
Well, the thing is, if they do, what are they going to do? They're going to probably try to mimic what the US is doing, right? So basically bail everybody out and provide cheap funding and for everybody who needs it. But the question is cheap funding what's needed for this crisis? No, the problem in this crisis is that there's so many people who just don't want to go out or can't go out to spend money. So the EU can do something similar to what the Americans have done. But in my opinion, that will still not really address the issue properly. And what's the proper way to address the issue? Very difficult to say. I think although I really hate the concept, I think helicopter money is the only real way to actually get or try to avoid a complete collapse. That's my view. But
well, at least by individuals, so they could pay their rent and survive. So it's more of a survival package than a stimulus package, in my view.
Yeah,
with more debt, which we'll get Steve going if we talk about the debt. I was hearing that after this debt that we're piling on this rescue package, both mainly the government, is that the U.S. will be very close to 125 to 130% of GDP, debt to GDP.
If you ask me, a lot more worrying is not going to be that number. It's the trajectory at which this number is now increasing.
Okay. So it's parabolic getting there.
Yeah, but, yeah. It's gone completely vertical. I mean, the rate at which it is now increasing is literally vertical.
Yeah. So the question I wanted to ask when I was watching this video is that, how people talk about hyperinflation. He was saying that the Federal Reserve Act would have to be changed for the Fed to truly monetize it and have the currency, become like, what they did in Rome, from gold coins to worthless metal coins. And it would take a change of law for them to do it. But he said that BOE has already crossed that Rubicon in some way. We haven't yet. So I was going to ask you, Stel, when the UK came up with their rescue package, was there something also tied to currency that was something they had never done before?
Yeah, basically they were gonna basically not issue debt to fund this. So they're using, I can't remember there's a name for it, but they're using a provision where basically they're conjuring up new money without issuing debt, which is also very worrying.
Yeah, that's how you get the Weimar Republic and the hyperinflations.
Yeah.
And the Fed hasn't done that yet, was his point.
I think the US expression on that, or the UK expression on that, is a difference, a distinction without a difference. What is the difference?
Wait. Hey, guys, really quick. I'm going to pass it over to you guys really quick.
Yeah, we have data coming.
I got to say a couple of things. Here's gold, and watch out if gold hits new highs, because this bull flag pattern points to like 1840. So, and that would be obviously pretty bullish. If we start breaking out here above new highs. I think a lot of traders have been standing in the way of gold. So this is a big deal. Also, don't forget to sign up for the Online Traders Summit, guys. Look at the lineup of speakers. And by the way, I just tweeted about it. If you guys support Forex Analytics and what we do here, and we offer free webinars every single day, we have this free online Traders Summit that our team worked really hard putting these speakers together and organizing it all. If you really like what we do and you want to support us, see my tweet. Please retweet it to your followers. For those of you that are on Twitter that follow me, spread the word around. This is a really, really neat event that everybody should be able to attend. Everybody should be able to listen to these experts and hear their insights. It's only 5 days left for me to get my presentation together. But anyway, I'm going to pass it over to you guys. Thank you so much, and all your support every single day. And gents, I'm going to pass over to you as the data's coming.
Thank you, Blake.
Okay. Thanks, guys.
Thank you,
Blake.
Okay,
I just posted the link to that once more on the chat.
We have data in 15 seconds. Initial jobless claims expected to be at 4.2 million. Previous was 5.25 million. So let's see what we get. Any second now. There it is, 4.4 million.
Yeah, good estimate.
I think that this now, Stelio, brings us to an accumulated 25 million plus of lost jobs.
And that takes us back to the question, right? The central banks and the governments, what are they doing? The ECB today, they announced that they're going to accept junk bonds as collateral from banks. The Fed is also accepting all sorts of stuff from banks. So basically, they're trying to keep the financial system afloat. Good. They're bailing out airline companies or whatever else. Good. But the main issue is people have lots of jobs, so they have no money to spend. Actually, they have trouble now with financial trouble, and also the people who haven't lost their jobs, they can't spend. So how do you address that part? That part, to me, is the most critical one. And obviously, most people think, oh yeah, this is going to be overdone within 3 months. I find it very unlikely, or 6 months. I think it's very unlikely.
Impossible.
So until then, how do you address that problem? This is the main issue. You can create all the nice facilities for the system and for banks and everything, and cheap money everywhere, but this is still the main problem. So that's what worries me, and that's why I think the recovery is not going to be a V-shaped recovery. It's going to be, unfortunately, more prolonged. I hope I'm wrong, but that's my view.
I think, Stelio, it's just common sense. An economy can't go back from having lost 25 million jobs to what it was before instantly. I mean, it's absolutely impossible.
Yeah,
absolutely.
And actually,
impossible.
I was reading there's a legislation which was voted yesterday, I think, in the House of Representatives and in the US, and it's includes a 320 billion program, which is a paycheck protection program.
Yeah, PPP, it's called.
Which this, I think, is good, because that basically helps businesses keep the people who work for them on the payroll, which kind of goes some way towards the main issue, which I think exists now. The 320 billion,
the basic concept is good, but I have huge objections with it, because it doesn't take into account what you were getting paid before, Stelio. So if you look at it carefully, you'll realize that it disincentivizes a big part of those workers to come back to work as long as the program is active. And in all honesty, do you believe that they're not going to keep extending the program at least until the elections are over?
Good point.
Yeah, no, I think it's possible.
So in essence, likely, my assumption is that you're going to see some of the businesses reopening and not being able to get their workers back, because many of them are getting paid more not to work than they were getting paid to work. You have to be stupid, right? I mean, who would go back to work to get paid less than having leisure time, right?
Me.
Yeah.
Yeah, you know why? Because you do what you love. So, while you're working, you
I have fun doing this.
You get to enjoy.
I was thinking, guys, you know what a good metaphor is? The world global shutdown. Let's call it a car wreck. Okay, so after a car wreck, even though the insurance pays and settles like a stimulus check, it still takes a long time for the driver to recover from the injury.
That's a good metaphor.
That's a good metaphor, actually. Okay. I'm on board.
I got two 100%. Good. How about the thousands of people out there? What do you think?
Yeah, there's no question.
They like it. All right. Okay. And that's the way I see it.
And one other thing that what Stelios says, in essence, since you like metaphors, I mean, think of it like that. Let's assume that tomorrow they say, okay, it's absolutely fine. We open up everything. And restaurants open up, movie theaters open up, music halls open up, malls open up. Okay, let's assume that everything is opened. What percentage of the population you think is going to immediately say, oh, perfect, my beloved restaurant is now on, let me book a table and go there? I mean, I think that they might open up, but how many are going to actually go there? I think a fraction of what normal activity would say.
Yeah, I agree with that, and I'm one of them. I'd wait and see how things go.
Yeah, I mean, many people, being prudent, would be like, okay, let's give it at least a few weeks, make sure that things are okay, and we see, we take it from there.
Yep.
Okay, so Stelio, anything else that we had before we jump on the charts?
Other than that, Blake talked about the PMIs. I mean, horrific numbers. We were expecting bad numbers, but even against expectations, they were terrible. Like composite PMIs in UK, in Eurozone, in the low teens, and it's insane. And unfortunately, I think that this will persist, and I hope I'm wrong, but. That was really it.
Having said that, stock markets still act like they don't care. I mean, considering the economic devastation and the slump in earnings, we are, as we were saying, we're probably at the highest valuations we ever had in stock markets, especially in the US, because price has dropped somewhat. But earning expectations have really plummeted. And as long as the situation is what it is, earning expectations are going to keep plummeting while price still, holds up rather decently.
And our friend Kostas here, who's a very good friend of mine, actually says that a lot of SMEs will not survive this. And unfortunately, he's right.
Absolutely, and that's another big mistake they're currently doing. I mean, I talked about, for example, many sectors like the restaurant sector. I was talking about that 2 days ago with a good friend of mine that's a market maker in Netherlands, and we were talking that it's ridiculous because, for example, they're trying to bail out sectors that by default have a very high risk, and many of them are going under anyhow. I mean, how many restaurants have you seen open up and not make it, Stelio? I mean, under good times, right?
Not all the time. Yeah.
So how exactly, let's assume that you bail out every single restaurant out there. First of all, that means that you make the business a lot less risky than it would be by default, even under good times. And second of all, in essence, keeping afloat competition that can't compete, I mean, along with the bad businesses, you damage the good businesses because now they have to, in essence, distribute among a number of businesses that is unviable. Once you go into a recession, you have to distribute the same number of clients. And by the same number of clients, I don't mean the same that you had pre-COVID and pre-recession. I mean the new number, which is going to be much lower. So in essence, you are ensuring that even the businesses that would keep doing okay or well, they're going to need a bailout as well. So, none of this makes sense.
Yeah, it's not healthy at all. It's not healthy at all for an economy and an efficient economy. So, yeah, absolutely right.
Yeah, and it's not, and even if you want to look at it from a humanitarian perspective, you're going to end up destroying a lot more businesses in the long term. So putting a lot more people in unemployment in the medium to long term than you will actually save for a period of a few months. So you're going to save everybody for a few months, and then you're going to send a lot of more people to unemployment than you would have to. But, it's like looking at a finger and not seeing the moon. Whatever. So S&P, and then I'm going to go to DAX, and then we're going to move to FX. So S&P has broken below this wedge. Having said that, it's still not breaking down. I think that if we are to see a continuation lower from here, it has to happen rather quickly. Otherwise, this is going to look like a consolidation, and we're going to have to look at a different recovery formation, perhaps a channel, and it's going to point higher. It's the exact same thing I'm seeing. Let me first go fast to the DAX, and then I'm going to go to FX. As I said, here's the DAX, by the way. DAX, the same thing, consolidating in a rectangle. So let's see. I mean, it's what I said before. Unless we see a break below 10,200, we might still have more upside from here. But something, I see the same type of pattern in the Kiwi and in the Aussie. I mean, initially, for example, here's the Kiwi. Initially, this looked like a very, very nice pennant. We broke down below it. I was expecting a lot more downside to unfold from there. But that's why important price action always. That's why you need to be agile, because price action always gives you more information to see what you have in hand. I mean, what has followed since seems like a consolidation. So the more the Kiwi is consolidating in such a manner, the more this looks to me like, a bullish consolidation. So the more we fail to break down, the more it makes me believe that we might have at least one more move to the upside. And here's the Aussie as well. You can see the same thing here, right? I mean, this looks like a pennant to me. So initially this looked nice as a potential breakdown, and it can still happen. But the more we don't break down, the higher the probability that we're just going to move higher from here at least once more before we see anything else. So I'm now a lot more skeptical that we're breaking down, and I see it a lot more likely that we might see another move higher in anything that's risk correlated, be it commodity currencies, indices, you name it. Okay, so that is that. Now, having to do with, if you remember, we spoke. Okay, now I realize this is not a daily. How did this change? Let's go to the daily. Anyhow, doesn't really change what we were talking about. Now, we were talking yesterday about the potential of Euro USD moving lower initially. And, I was saying that one of the currency pairs that tells me that that might be the case is the much cleaner technical formation that we have on the USD Swiss. So USD Swiss clearly looked like one move higher, a triangle forming, likely one more move higher before lower. And the USD Swiss is indeed breaking above this triangle. And of course, at the same time, since they're inversely correlated, very highly inversely correlated, Euro USD is moving lower. So I think that we might see more downside in the euro, more upside in the USD Swiss, at least in the short to medium term. So I wouldn't be surprised to see a lower low in the Euro USD, a move towards 105, likely. Now, will we see parity? I'm still very skeptical about it. I'm not saying it's impossible, but my intuition tells me that parity is not going to be easy for the Euro USD to achieve. Not unlikely, but not easy if you ask me. I still expect that the DXY might initially break higher, might initially produce a higher high, but I think that it will eventually fail. And when it fails, I think it's going to totally get destroyed. So I remain bullish the dollar in the short term. Few days, a few weeks, worst case scenario, a few months. But I believe that after we see a big reversal, there's going to be a prolonged period of immense dollar weakness. So I think the big money are to be made being short the dollar later on and not being long the dollar in the short to medium term. Now, having to do with metals, because a lot of you, are always showing a lot of interest in them, and I totally understand it. Gold retested this inverted head and shoulder neckline. Yeah, I know. I mean, many don't like head and shoulders formations as continuation patterns, and I'm with you. I prefer them as reversal patterns. But in any case, it remains very well bid. It is clearly noticeable that we have a lot of divergences in the vast majority of time frames. So I have to say that I'm quite skeptical about gold strength in the short to medium term. In my mind, there is no question about the long term. I don't see any scenario under which gold and silver are not going to be moving a lot higher. Just recently, what was it, 2-3 days ago, the Bank of America actually came out and said that they see gold making it to $3,000 within the next 18 months. I'm with them, more or less. But the fact that they just came out and said so troubles me even further about how much upside we have in the short to medium term. So I would really like to see, and I think it's likely that we will sooner rather than later see the market shaking out the weak hands initially before actually continuing higher, with a lot less people riding this bull market. Okay, here is silver as well. So silver found support at previous highs there, continuing higher from there. So exactly as I said about the Aussie and the Kiwi, initially I thought we might move, at least towards 1380. But what we might be seeing here is, let me mark it in a different color. So what we might be seeing here is some type of a flag formation, something like this. So we might get something like that. Okay. In any case, I'm definitely hoping for lower prices in silver because I have exposure in physical gold. I want to get myself some physical silver as well. Now, crude is rebounding, so it has somewhat stabilized. Are we out of the woods yet? Too soon to tell. Too soon to tell. By the way, I had promised you for the day before yesterday a blog post about how you can get long exposure in crude oil, through other means like buying companies, etc. That don't have the problem of the huge contango we have at the moment. And we were delayed a little bit. More members of the team wanted to contribute, but I can tell you with 100% certainty that this blog post is going to be out today because it's almost done. So within the day, we're going to have that post up and running on our blog. The blog is free to visit on our site, so it's one of the free parts of the site. Any private courses? No, not yet. We don't offer private courses, but what we do offer is a chat room that people can ask any questions they want, and Forex Analytics offers 5 different types of analysis. So, you want to learn, in my opinion, the best thing you can do is, read our analysis. We cover 30 different instruments, and then you can ask questions in the chat room. This problem will end soon, I hope, with more pure in the States. I live there is a threshold of suitable work, which if you don't take the work constitutes fraud. Okay. What about countries that are heavily reliant on tourism like Spain or Greece, for example, because I am Greek? Big trouble. As simple as that. There is absolutely no way you can persuade tourists to travel so soon. So, Carlos, I'm afraid from your name and from your question, I assume that you are Spanish. I'm Greek, so we have the same problem. You can more or less have it as a certain that this year's season, tourist season, you can completely write it off. I mean, it's going to be a miracle if we have something like 20% of normal activity, and 20%, in my opinion, is going to be a small miracle. So, it's going to be a huge blow to these economies. Huge blow. UE recovery plan may trigger total of euro 2 trillion of spending and investment, would allow commissions to raise euro 320 billion on the market. EU leaders could endorse legal text for recovery plan in June. This came out 2 hours before, says FX Trader. Yeah, you know something? Until I see who is going to foot the bill and who is going to guarantee for that money, call me very skeptical about it. I'm not saying it's not going to happen. I'm saying that it's easy for them to decide on potential recovery plans, but the thorn is always going to remain agreeing on who's going to guarantee for all that debt that will fund spending, investment, and all the rest you talked about. So, I want to first see them and agree on something like that before I'm in the camp of the optimists. Okay. Let's hope so, but we'll see. Do you know current DSI reading on SPX? Yeah, absolutely. Let me pull the DSI for you. Okay, here's a freebie. There you go. DSI, you wanted to know about the S&P 46, so it's neutral, more or less. You can see it's actually neutral. And if you notice the DSI, there are no real extremes at the moment, right? You can see it here. I mean, you don't really find extremes in sentiment. Whatever extremes we had have been more or less reset.
Lean hogs.
Yeah.
I know you're a big hog trader. I can't trade them because they're not kosher. And the rabbi would have to spit on my mouse for me to trade bellies or hogs.
Whatever you say,
pork bellies was a big contract for a while on the Merc. Okay, buddy. Anyway, lean hogs are not a lot of people want to eat pork. You know, we're having trouble with a lot of the coronavirus is going into all our meat production plants here in the U.S. We're going to have a problem. Good thing you bought all that meat, Steve.
Oh yeah, I have a lot of meat stockpile. That's the only certain
you know, this supply chain is fragile. If the truck drivers go, look out. And they're under a lot of pressure. There again, a lot of them are small businesses, trucking companies. They're not all national chains. And I heard they're only getting half as much as they used to per load. So the people thinking, well, lower gas prices is going to help trucking. Well, that doesn't make up for what they're getting paid to haul. So I throw it in there.
Yeah, that's one thing. And, another point to make here is that, you also have to find people willing to do that. Because don't forget that's an issue as well, right?
Yeah, you need the PPE, and none of the truck drivers wear anything like that.
Yeah. A friend here is asking about the IBEX. I have to tell you that IBEX looks really, really bad because after, peaking in 2007, we had an impulsive move lower, a huge period of consolidation in a symmetrical triangle. We broke down below it and we really plunged. And focusing on what's happening now, what do you see here? Because what I see here is a corrective formation, right? I mean, too soon to know if it's indeed broken out, because what seems like a bear flag that's broken out can prove to be something like that, right? You always need more price action in corrections, to be certain how the formation looks like. But one way or another, this recovery doesn't look impulsive to me. So what I see is a very, very oversold market resetting to neutral RSI, so to neutral momentum, correcting in time a lot more than in price. And I think that it's a matter of time to resume to the downside. That's what I see here in the IBEX.
Tapas will get cheaper.
So that's what I see in IBEX, since you're asking me. Let me see more questions. Italy debt to GDP from 135. No, Italy debt to GDP is not 135%. I think it's already quite higher than that, if I'm not mistaken. But yeah, you might actually be right. I think it's around 140, if I'm not mistaken. Could easily jump to 160, 170. Oh yeah, absolutely. With the deficits we're going to have this year and next year, you can call that a certainty. At that point, mathematics will take over and trajectory will be unsustainable. Would you reckon Italy default restructuring is likely? And if so, this could be the next big trigger for bearish market. Enrico, from your name, I assume you are Italian. So, ciao to begin with. I love Italy, by the way. A beautiful country, and those of you that haven't traveled there, you should. Let me tell you something. I think that the biggest danger for Italy, and I said that a long time before COVID, is the political situation. I think I mentioned it even at yesterday's webinar. Italy is an unfixable mess, mostly because with the situation you have there, that with the system you have, the electorate system you have at the moment, that you can't actually form a government, a strong government, and you need to have like those bastard governments, that parties that don't even have a common plan have to mix together. I think that's the biggest danger for Italy. So as long as that's the situation in the political system, I think taking the proper decisions and moving away from populist policies back to an economic model that is actually solvent is not likely. So
Arrivederci Roma.
There you go. We got some music to accompany. So so I'm very, very worried about Italy. Very, very worried. I think that eventually politicians and political parties there are going to push Italy out of the euro without a plan. I'm not saying that necessarily being out of the eurozone is a bad thing. What I'm saying with certainty, though, is that the way you're going to leave likely the eurozone is going to bring unmeasurable pain to Italy.
Hey, Steve,
unmeasurable pain.
Before we get to the interview, and I know you do screen them and trade them sometimes. I know this Bitcoin, after its recovery, hasn't done anything. It's going sideways. Nitish Kumar is asking for any update you might have on Ethereum, which I know is something that you've traded before. Maybe a quick crypto review. We haven't had any in a while.
So another proof here that Bitcoin is not uncorrelated. Doesn't this remind you of
S&Ps?
Aussie, Kiwi, the S&P? Isn't it the same type of formation that you see here?
Yeah.
Yeah. So, initially I thought we're going to break down again, but now I see the potential of one more push to the upside before moving
it's not
lower
giving up
again.
the ghost at all from there. Yeah. It's just moving sideways.
And here's Ethereum. So I still believe that Bitcoin and Ethereum are not done moving lower, but they don't seem ready to roll over just yet. So I'm pretty convinced that what they did in the initial sell-off of risk, they're going to do again. So when risk sours again within the next probably few weeks maximum, I think that Bitcoin and Ethereum are going to sell off in tandem with them. So I wouldn't be buying them because these rebounds look corrective to me. I might contemplate buying them, although I would probably prefer to buy other type of assets that will behave in a similar manner after another move to the downside. So that's my prognosis about these markets. Okay. Please clearly explain Blake's comment why weak equities means strong dollar and vice versa. Because the dollar is still considered by the market the go-to safe haven asset, currency in this case, mistakenly, and they will soon find out why. So whenever there is a risk off, you get flight to safety, and safety means in currencies, safety means the Swiss franc, the Japanese yen, and the US dollar. That's why it's inversely correlated. That's what Blake's comment meant. I came late, apologies for that, but will there be a recording of this video? Yeah, absolutely. If you go to Forex Analytics, webinars, playlists. You can see here every video in its playlist, or if you just go to videos, you can see every video chronologically. So, the newest one on top to the left, etc. So yeah, you can always find recordings. Usually a couple of hours after the webinar is over, the recording is going to be up there. Okay, so you can find any of our webinars recorded there. Although the webinars that are for clients only, that like the European crossover webinar and the daily roundup, they get posted several hours afterwards because they're clients only. They are mostly examining price action in the shorter term, and it's fair for our clients to not be readily available for everybody else. Large international USD debt issue. Yeah, absolutely, Baroque. That's a huge issue, and that is why once the dollar starts plunging lower, you're going to see a huge rally in emerging markets, not only their currencies, but stocks as well and to their economies. So I agree with you. US dollar denominated debt is a huge weight, a huge burden to these economies, but soon enough, it's going to become the exact opposite. The fact that the dollar is going to be depreciating and inflated away to oblivion is going to immensely help these economies finally overperform. But we're not there yet. You need to be a little bit more patient. Thank you, Coach. Who do we have today?
You ain't nothing but a trader, scalping all the time. You ain't nothing but a trader, scalping all the time. I'm going to interview JJ VWAP right now. Thank you, Steve. Volgi.
Okay, I have an idea. We're going to start monetizing Face. People that pay will also get to hear your songs. Okay.
You ain't nothing but a trader. All right. Anyway, and everyone thought Elvis died.
Enjoy the interview.
Elvis trades FX from California. Anyway, so JJ, thanks so much for being here. Gonna get you set up now, partner. Welcome to Face, JJ.
Thank you. Thank you for having me. How are you today?
Great. Very nice to meet you. I'm glad I reached out on Twitter, read a little bit about your background. Have you used Zoom before?
Yes, I use it every day in my in my room. Yep.
All right. Well, then
Perfect.
you know how to share your screen.
Share your screen. Yes.
Oh, you want me to share my screen? Sure.
Sure.
Absolutely. Unless you want to talk about girls and cars.
Well,
and you should still share your screen.
Unfortunately, I think I've done better trading with either of those two subjects.
All right, yeah. I know. Well, anyway, at least you could have a stop in. So
exactly.
So JJ, I went to your website and looks like you guys specialize in trading micros or mini S&Ps. And before we get to the markets, I'm really interested in people's background and the journey that they have to where they are. You're like at point B. How did it start at A for you?
Well, it started with me. I'd finished university, did 4 years of microbiology. My parents wanted me to go to med school, and I was completely didn't have the talent nor the stomach for it. Moved out to Vancouver. I grew up in a place called Saskatchewan, which is right in the middle of Canada. And immigrant parents from Sri Lanka, so they would definitely, everybody in my family is a doctor. So I'm the black sheep.
Yeah, you are. But at least you at least with your family, you could hit them up for maybe some trading capital.
Exactly. Well, they're pretty tight. They're pretty tight. Oh man, So I moved out to Vancouver just because it's minus 40 here most of the time, and 3 of us went out from university, and I was actually working as an organic chemist making shampoo in the daytime, and I was working as a bouncer at night in a nightclub.
What a renaissance, man.
and the nightclub was next to a how shall I say, a gentleman's club. And when that
okay.
place closed, the ladies would come and dance at our club. And so, of course, wherever there are pretty girls, traders go. And the Vancouver Stock Exchange traders would all come to the club. And one of them gave me the book Liar's Poker,
Okay.
and by Michael Lewis. And
Yeah.
I was hooked because I was looking for something, and I was like, okay, I want to be a trader. This is me. You know,
Yeah. And Vancouver, man, that's
oh,
the land of barracuda and sharks and
oh my goodness. Well,
shells and whatever you could do.
oh,
Vancouver reminds me of the saying that Mark Twain said, mine is two liars standing over a hole.
mhm, definitely. And
So
Vancouver,
you must have been a natural resource guy if you were hanging out
oh,
there for a while.
well, what happened was I started. I got a job selling advertising. I read Linda Ratchke in
Okay.
interviews with the Jack Schwager book. Said she got a job
Yeah.
close to the exchange so she could get a job in the market. So I did the same. I worked for the federal government because I speak French. And one day there was a little man, a little East Indian guy with cowboy boots, and drove a Rolls Royce, and he gave me my first job working leads at night. And then he got me a job with the company that made the leads because I was having trouble getting on a trade desk because it was kind of a closed city. So I went and got about 200 clients that were either stock promoters or little hedge fund guys, you know, the guys who did Reg S convertibles
Hmm.
and things like that. And so when I did finally weasel my way into a trade desk, because the head trader was dating one of my friends, that's the only reason I got the interview. And
Okay.
so,
It's not what you know. It's
oh,
who.
exactly. Yeah,
Okay.
definitely. So I showed up my first day for work. I couldn't trade my way out of a wet paper bag. But I had 200 clients that that would deposit millions of shares of stock and that we could liquidate at, 5% commission.
Nice.
So,
Oh, sorry.
yes. Yeah. So that's how I
Churn.
started off.
Nice churn.
Well, it was, my clients were the best
Nice
because
load. Yeah.
well, all it was what was the volume and how much did I sell? See you tomorrow.
Right.
That was
Right. Right. Not the old days.
exactly.
All right.
And,
Well, God, what a background. So go ahead, keep going.
and I started right when Bre-X happened, Bre-X Minerals, which
Oh God, that's the guys that got thrown out of a
the
helicopter.
helicopter. Well, he apparently fell out of the helicopter, the geologist.
Okay. Yeah.
That
was a Vancouver listing, wasn't it?
It was actually Alberta, and then it went to New York.
Oh wow.
And
wow.
one of my guys had 4 million shares at 30 cents, and it went to $268 a share before Wanda Guzman fell out of the helicopter. And so when that happened, I realized I better go into the U.S. markets because the Vancouver, the Canadian mining sector shut down for 10 years. We had, so I specialized in U.S. listings and trading U.S. bulletin board and pink sheet, and got really good market maker relationships. And my clients were most of the guys who were in the Wolf of Wall Street. When that place closed down, they became stock promoters, and they would
Okay.
sell stock through Canada into the United States because we could do things like direct trades and I basically owned the level 2. Every one of the market makers had an order from me, and I'd sort of move it around like a chessboard.
Yeah, didn't those pinks and bulletin board companies basically dilute their shares by paying guys with either free trading or
Exactly.
restricted to come in and create buying and liquidity in the issue?
Exactly.
And then the owners of the stock would use that volume to get liquid themselves?
Definitely. And it was free trading stock. And, that's why I used to always say zero cost stock always finds the bid. And yeah, that's exactly what they did. And Canada back in the day had 13-day settlement. So these guys would have 40 or 50 accounts and just wash trade between them, create demand, and then dump into it.
What a scam.
Oh, it was. I mean, it still happens to this day. You can still see it happening with dilution,
sure.
but not
Yeah.
not as bad as it used to be. But
Yeah.
now it's just done by more sophisticated players.
Like the marijuana stocks?
Oh my gosh, yeah. And I love Canada. It's a great country, but any Canadian deal will have a ton of S8 paper and probably a convertible on it. That's
Okay.
floorless.
All right. So tell us about your development as a trader. So, I see what you're using now, and a lot of floor traders use this. Why don't you tell people what it is and market
Certainly.
profile and what it does for you to identify important areas in the market?
Well, it's great. What happened with me was I had a massive heart attack in 2012 and a quintuple bypass. So I had to figure out something a little less stressful than making markets and taking companies public. So I was working for a software company, and one of the kids that I was coaching said, "Hey, you've got to check out futures." So I went into futures, and the thing is, I didn't know I can't read a candlestick chart worth putty. I can build one to make retail people come and be comfortable, but I had no skills as a trader, no discipline, none of that stuff. And so I was lucky enough to find Tasty Trade, Shadow Trader, which thankfully led me to Jim Dalton. And as soon as because a lot of the trading services were by these yahoos who've never been traders, Dalton was on the floor. He was director of floor operations for UBS, and when he spoke, he just reminded me of the guys who trained me. So I just fell into market profile basically 2 weeks into my journey, and then I found out over years of using it how, especially in the day time frame, it's great for finding inventory, and when there's trapped inventory, long, short. It gives beautiful structure. You can tell by the pace and the way that the market trades. Like the S&P will trade two exact references to the tick, probably because of algorithmic execution. And it sets up for some really, really nice um, places to take trades and manage your risk. Kind of shows you where the stops are, all those sorts of things.
How would you describe your trading? Day trading, swing, position, or a little of everything?
Day trading.
Okay.
Just because of my, I'm 52 now, and just trying to. I like to sleep at night.
Okay.
Yeah.
All right.
Like to
Okay.
be flat. Yeah.
There's definitely enough volatility and huge ranges to take advantage of it. What is there a time frame difference on how you use market profile? You break it down in time frames, or is it all the same time frame?
It's all the same. It's half an hour, as Dalton teaches.
Okay.
So each it's just like a half an hour candle chart, but just you get to see inside the candle and see where the volume is and that sort of thing.
Okay. Why don't you tell us what you're seeing right now that is significant as far as inventory above the market, or maybe some type of demand underneath it, and how you pick it out on this?
We have pretty much balanced inventory. Here on this chart here, you can see the overnight in comparison to the previous day. And most of the inventory is, half of it's above and below. So we just say it's balanced. And if we open within today's range, we'll be looking at some chop and some back and forth as we sort of balance out and wait for that initial, bunch of order flow to come in, because we have a lot of economic news today. So generally, as Dalton teaches, when markets are in balance, or they're sort of waiting for information.
Okay.
Yeah.
Okay. So right now, do you have a lot of days where the market's in this position? Is that a no trade day for you?
Oh, no, definitely we
when
can
it's
trade.
balance?
Oh, we definitely trade balance. We trade, like for example, the overnight high, when it came here, these green areas are sets of single prints from previous trading sessions, and you'll see that the market went exactly to that set of single prints and sold off. So my guys would have probably taken a short somewhere, at 28.06. They would have had their stop quite tight at 07.25, and looking for a target of 99 or 98. And so what I do is I take traders who are fairly new and I teach them kind of baby steps, small trades. We're not looking for home runs, base hits. And we use the micro because it's kind of like trading the mini with training wheels. If they have a bad day, it's $25 to $50 as opposed to, losing
So
a $5.
what's a 10 handle? A 10 handle move is worth what?
It's $1.25 a tick.
Oh, okay.
Yeah. So
Okay.
So my whole thing is to learn how to trade well and develop discipline, journaling skills, be able to sit and observe a market without getting that feeling where you have to trade. And then what I do is I teach them the mechanics of market making because surprisingly, and I never really had any retail clients ever. So I didn't know that retail doesn't know that, how an order gets processed when they go to buy a stock, for example, and someone shorts it to them or, and there's this whole thing about, paying for order flow is bad. Well, that's the basis of that's the business of the market. That's how it's been set up for such a long time. So a lot of these things people don't understand, and they don't understand, they've never heard of inventory. And when inventory gets too long, too short, and they don't understand the difference between wholesale and retail.
Okay, so a question I have for you is you came up during the period when open outcry was still happening, especially up in Canada. What would you say is the major difference in the market now that we're basically no people and just machines? What have you noticed?
One thing I notice, I started just when the floor was closing in Vancouver. So most of the guys who trained me were floor traders. And what I notice in this market is the S&P, these E-minis will trade to the tick to reference points, which, human beings, there's going to be some slippage, back and forth. So I think that algorithmic execution is very exacting. A lot of people don't like that.
Interesting.
The other thing is, ever since they took away the specialists in the New York Stock Exchange, like for example, this last 8 weeks when the market fell apart because we didn't have any structure, the market makers weren't taking any risk and absorbing any inventory in the E-mini. So the prop traders stepped into that vacuum and took that place. Now, they don't have any obligation to us for fair pricing. So the price action was just out of control. And all they were doing was, putting together a position, running the stops, dumping the position, and doing it over and over again, like in Globex. So I noticed a lot of that. And then I also notice, I'll be looking for blocks. If there are a lot of blocks printing in the ES, that means for me that the market makers are absorbing inventory. And if they aren't, that means the prop traders are breaking up their orders and hitting different outlets, to mask size. So I notice a lot of that with the algos. I don't really mind the algos because I kind of know where they're going to, I can tell in a market like, just now when we went to that 2807, that was a very, very technical, it stopped to the tick, 13 contracts up there and right back down. So I don't mind algorithms at all. The one bad thing about it, I have a buddy of mine who was at Spear Leads and Kellogg's on the floor for 40 years. And he said, when there's a big seller, in the old days, you could call somebody and go, hey, this guy was interested in size 2 days ago. It's cheaper now. You want to take that 2 million shares into inventory. That doesn't happen anymore because everything's so fast. So that's why we have these massive vacuums. And you can see on this chart here, we really haven't established a trading range. And we, ever since the big money managers started locking up the big positions like Apple and Microsoft, and less than 1% of the float of those companies trade on a daily basis. So God forbid any of these firms come out of any of that paper because it'll be catastrophic.
What firms?
BlackRock, Vanguard, State Street, yeah, they're 20, 30-year long players. But I don't consider this market very liquid, considering so much of the floats of these companies are locked up.
You know what that is? I think, and it's not just happening in there. It's interesting that you're bringing it up. Are you talking mainly micro? That's a new product, or are you talking both the minis too? are not showing the same liquidity they were, say, before this recent sell-off?
Definitely, definitely.
Okay,
And
because I'm seeing it in gold. We know what
okay.
happened with crude.
Yes.
I'm seeing bigger spreads and everything. Things like TLT used to be very liquid. Now you need an appointment for a trade. They're definitely taking away. These markets are becoming less and less efficient during this crisis.
Very,
Bothers me.
very much so. And I mean, for me, I'm a simple guy. I mean, when I started, there used to be something called the NASDAQ Red Book, and it was like a red book. It was the size of a Bible, and it contained all the market makers that made markets in U.S. equities. Right now,
Yeah.
I bet you that book is probably the size of a pamphlet. Because
Yeah.
there's Citadel and Virtue, and so they've monopolized pretty much all the liquidity, and they've monopolized all the cash with these big money managers. Um, you know, um, and you have things like BlackRock's Aladdin is got $18 trillion running through that algo for them and other clients. So you can definitely tell. It's funny when BlackRock got the keys to the Fed, the price action all of a sudden calmed down instantaneously in the ES.
Interesting.
Yeah.
Interesting. You're an interesting guy, JJ. And I'm certainly glad that you survived a health crisis and that you're out there teaching people. You want to show your website and tell everyone
Definitely.
what your model is and how they could reach you.
Definitely. 1 second here. This is my website here.
Do you really have a room like that?
No. That's our marketing guy, and
I love that room. Put that back up there again.
Yeah, that's our marketing guy, and Steve is my marketing guy. He's from Long Island,
Okay.
Port Jeff, and this guy works 24 hours a day. Like, he's tweeting at 3 a.m.
Yeah.
Getting, I have a podcast, so he's getting guests for that. He's always changing the site. I mean, the guy is, it's amazing because he just, it's nice to have someone on the team.
The only thing that could top it would be instead of the wall have an ocean in the background there.
Oh, exactly.
All right. So anyway, and I mean, hey, how about this, JJ? And a picture of you getting out of your Ferrari.
Oh gosh!
After landing on your private jet, getting into your Ferrari and walking into that office and say, "Hey, you want to learn how to trade?"
Yeah, exactly.
You could be like me.
Oh, I know.
The
funny thing is, well, that'd be great, but I live in Saskatchewan. And a Ferrari would last maybe 5 minutes here.
Look, isn't that every trader's dream?
The Ferrari,
to live
in Saskatchewan. Definitely.
I know that was on my bucket list.
Hey, we get Amazon delivery by Moose up here.
It was great having fun with you, man, and good luck. And you could follow JJ on Twitter at VWAP Trader, VWAP Trader 1. And is that the name of your website too? No, it's
microefutures.com.
Okay, so we have it at microfutures, microefutures.com.
Yep.
Really pleasure meeting you, man. University of Heart. I see your description. University of Heartbreak. What you should put up there is University of Heart Attacks.
Exactly.
And you're a survivor.
Definitely.
And you know what? You're also my trading warrior brother from here on out, buddy. So it was really a pleasure.
Thank you, Coach.
Meeting you, man.
It's been an honor, Coach. Thank you.
Okay, and I really, let's see, 175.98. People are thanking you for coming in. Brock says awesome interview. So JJ, good hunting, and may you and your loved ones remain untouched by this virus. And that's a wrap, everyone. Remember, don't just count your pips, count your blessings. And we'll wrap it up tomorrow on TGIF. Adios, everyone.
Thank you.
Thanks a lot, JJ.
Thank you, Coach.
All right. See ya.
Bye-bye.
Bye-bye. So let's see. You could stop sharing more. Okay. See you, everyone. Okay, Monica. See you, Hammett.